Right, big news that we are tracking. TCS has reported its third quarter numbers for FY25. Let's cut across to Rima Tendulkar for the numbers. Rima.
Well, these appear to be largely in line with street expectations. The company's dollar revenue has declined by 0.5% on a quarter-on-quarter basis. Remember, this is a seasonally weak quarter. There are furloughs, lower working days, so that could have impacted the company's top line. So dollar revenue has declined by 0.5%. Margins on expected lines have expanded by 40 basis points to 24.5%, coming in line with expectations. And the company's profits have gone up by 4% sequentially at 12,380. Prima facie, these numbers appear to be in line with the rupee has declined by rupee revenues have declined by 0.5%. I'm still awaiting what the dollar revenue growth is. The company's constant currency revenue growth in the current quarter is at 4.5% on a year-on-year basis. And this is a slight deceleration compared to the 5.5% growth that we had in Q2. We do not have the constant currency revenue growth on a quarter-on-quarter basis, nor do we have the dollar revenue growth on a quarter-on-quarter basis. The company's deal wins have picked up. So deal wins have come in at $10.2 billion, which compares with $8.7 billion. So there is a pickup seen on a quarter-on-quarter basis by nearly 17%. And even on a year-on-year basis, the deal wins are up 25%. So this is largely it's slightly higher than the company's comfort band. They've always spoken about $7 to $9 billion being the quarterly deal win run rate. The attrition for the company has inched up marginally. It now stands at close to about 13%. And I think in the prior quarter, it was at 12.3%. But again, at 13%, it's still within the company's comfort band. They've spoken about 11 to 13% as the comfort band for attrition. It's just that it's come in at the upper end. The total workforce is at about 6,07,000. And I think this would be slightly lower compared to what they had in the prior quarter. So the company's net headcount would have fallen in the current quarter. I think quarter-on-quarter, it would be a drop of a little more than 5,000 employees. What I'm just trying to calculate is the performance of BFSI has picked up. So on a year-on-year basis, the BFSI revenue has come in at 0.9% sequentially, which is higher than the 0.1% that we had in the prior quarter. So the resilience and that little bit of green shoots demand recovery in BFSI still very much continues. Telecom is still a weak spot. Telecom revenues are under pressure. And in terms of geographies, North America has declined by 2.3%. Again, these are year-on-year numbers. India revenues are now at about 9.8% of the revenue. So India revenues are up close to about 70%. So there would still be a sizable contribution coming in from BFSI. I think we have some guests joining in to give us their initial comments. We have Sandeep and Moshe with us on the show. Sandeep, if you can hear me, could you give us your initial thoughts on TCS's numbers?
Yeah, so I think, it is a inline kind of number as rightly mentioned, but I am little positively surprised with the slight inch up in the attrition number because, in this industry, if attrition goes below 11%, then it also is a sign of lack of demand. So fortunately, that has gone up a little bit, and while after 15-16% it starts hurting the margin, but at 13-14% it is also a sign of recovering demand. Secondly, the deal win numbers are good. Rest of the numbers are in line. So I don't read too much, I would say, because the stock has also corrected a little bit recently. So I think it is an inline kind of number, I would say, and the street will not be disappointed with this.
But Sandeep, shouldn't we see the rising attrition in context with the overall headcount, which has fallen on a sequential basis?
No, absolutely. So they will have to hire now more aggressively, and that will also, but at the same time, attrition is a very funny thing in this industry. You will have to always look at it from both sides because it goes substantially, then it starts hurting margin very badly. But again, it indicates there is a strong demand. And at the same time, if it goes below certain percentage, your margins may improve. But at the same time, it indicates that growth will be muted going forward. So I would say that, they will have to hire more aggressively. That is a concern. But at the same time, this inching up a little bit is showing that your growth is coming back.
Okay. The dollar revenue for the company is at about $7.54 billion. And this is a decline of 1.7% on a sequential basis. And again, it's slightly lower than what we were anticipating. So Q3 has been subdued in terms of the overall top line. The revenues have come in modestly lower than street expectation. Dollar revenue growth down 1.7% sequentially, lower than the CNBC-TV18 poll of a decline of 0.6%. And even on a year-on-year basis, revenue growth at 4.5% is a deceleration compared to the prior quarter. One of the other explanations for that could be that the BSNL deal, the contribution of the BSNL deal peaked off in Q2, and the incremental contribution from BSNL in Q3 is lower than what we had in the prior quarter. And this has come in a seasonally weak quarter, so that could have also hurt. Dividend, so there's nothing very exciting in the numbers. You could call them in line, maybe modestly lower on the demand front. But given that the stock itself has been a bit subdued, even today, it ended with a cut of about 1.7%. Do you think these kind of numbers are in the price?
So the market has priced it, I think, to the perfection as I see it, Rima, because I think expected numbers have come in and the market has adjusted the stock price, which has fallen by about 10% from its high level. So that part, I think one would say that, yes, market is right in, I think, judging the numbers. On the other side, what one could possibly ask for is, I think, and as I see it little favorable on the attrition side. If 13% attrition has happened, it means that I think the company is very fast adopting the AI way of working, which is very fundamental for saving the cost going forward. Should that get confirmed from the management commentary, I think this would probably help in de-rating the stock in the marketplace as I see it. The second point, I think, which one would like to definitely get more amount of clarity information from the management commentary, whether I think the respective verticals, be it BFSI or be it engineering R&D through the manufacturing, are they fetching more number of deal wins? I think I heard you saying that I think they have got 17% QOQ increase in the deal wins versus YOI 25%, which is a good sign. Now, whether this is coming from BFSI and manufacturing, if that gets confirmed, then probably I think you're also asking for the confirmation on the margin front. In my viewpoint, I think both these commentaries are going to be very important role play hereafter. And last but not the least, I think would like to see how exactly they see the scenario emerging US, UK, and other emerging markets, including India, as far as I think the demand for services are concerned. Whether the company is shifting into largely to data center and the AI, that also I think is a commentary that one can possibly ask for.
Okay, so while the overall revenues, the dollar revenue has fallen by 1.7%, as per my initial calculations, it appears that BSNL, the India revenues, here the India revenues in absolute terms has actually gone up by 8.5-9% on a quarter-on-quarter basis, which means the dollar revenues ex of BSNL have fallen by nearly 2.5%. So the international revenues, or the revenues ex of the BSNL contract, which has been pumping the company's revenues, is actually fairly muted. And that, according to my initial calculations, maybe I'm wrong, but we'll wait for some clarification. I think that's down close to about 2.5%, and that is a bit disappointing. Secondly, even the BFSI contribution in the current quarter was about 30.5%. And in the prior quarter, if I'm not mistaken, it was close to about 30.8%. Yes, the BFSI contribution has come down on a sequential basis. So BFSI revenues have actually fallen by nearly 2.6% sequentially. And considering that BFSI was a space where we had a pickup and the street was hopeful across the board, the industry was talking about a pickup in BFSI, at least that hasn't translated. BFSI revenues have fallen by 2.5% in dollar terms on a quarter-on-quarter basis. So that is a bit of a concern. And again, BFSI is propping up the company's revenues. But on the whole, as I said, revenue performance is slightly lower, modestly lower than street expectations. Margins in line, margins expanding to 24.5%, driving a 4% jump in the company's profitability. Deal wins have picked up sequentially by 17% to $10.2 billion. Headcount is down, attrition is up. So it's sort of a mixed quarter, but with a negative bias. Sandeep, come in. I don't know if you've had a chance to look at the performance of BFSI in the current quarter, and even the contribution of BFSI. The BSNL deal, the India performance. How is it ex of that?
No, ex of that, it is definitely muted. But as I said that, people see forward looking how the outlook looks. So from that perspective, I think the deal win number is really encouraging. 25% growth year over year is good. And also remember, as I said earlier also, that stock has corrected quite a bit, and for TCS kind of stock, that kind of correction is quite high. So I don't see people will read too much negative from here. That is the way we look at the company.
Okay. Yeah, the deal wins have been very strong and well-rounded across the industries, as K. Kritivasan says. BFSI returning to growth, continued stellar run of regional markets, and early signs of revival in discretionary spend in some verticals gives us confidence for the future. That's an important line. Early signs of revival in discretionary spend in some verticals gives us confidence for the future, because this sets the tone for Q4 and what the company and the industry is likely to do in FY26. Because so far, discretionary spending, the recovery was limited to BFSI. If they're now talking about it coming through in other verticals, in some verticals, that would be a positive. Gurmeet is also joining in. Gurmeet, first, your comment on the Q3 numbers, and then juxtapose it with the way the stock has been performing.
I think it's in line with the price action. Maybe you can say it's a mild miss because had the numbers been even static minus the BSNL deal, I think, and seen some growth, probably you could have won more confidence that there is a pickup and the negativity around IT is behind us. But deal wins are encouraging, upwards of $10 billion. Also, the retail and consumer vertical has done better. The BFSI is flat. Manufacturing is actually mildly negative. So vertical-wise isn't much. So my sense is we have to probably wait a little bit for the management commentary. I think it's basically the earnings have gone up led by margin. One thing which could obviously is positive is the two dividend side. One is the interim one with a special one. They did it last year as well. Last 2 years they've been paying almost 4 to 5 times along with a buyback. So even I think the price action could be very muted considering what the numbers are, because the stock has fallen from 4,500 levels to 4,000. But considering it's a seasonally weak quarter, I would say it's neutral to maybe a mild miss, Rima.
Gurmeet, Sandeep, Deven, thank you very much for joining in. The company itself in their press release says strong TCV. TCV stands for total contract value or deal wins in a seasonally challenging Q3 positions TCS for long-term growth. We're going to slip into a very short break. Archana, with that, it's back to you.
Thank you, Rima, for that update. And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18.